Today, our conversation will be on CBN's policy direction. A lot has happened lately, from the increase in the monetary policy rate to the most recent, that is the recapitalization policy that was released by the CBN yesterday. And how will that impact on the Nigerian economic space and the fintech industry specifically? I am now joined by my guest, who is the founder of Savings Box, Bayonle Omoyele. Thank you for joining us on Business Daily.
Yeah, thank you. Good morning. Thank you for having me.
Good morning to you. And what is your take on, the recent recapitalization base we are seeing or have heard from the CBN? What is your take on that?
I think that CBN they have done a good justice, because given that 500 billion for banks with international touch, 200 billion for national banks, 50 billion for regional banks, it is important for Nigerians to understand this trade, right? In year 2005, the inflation rate then was 3.37 when the capitalization was moved from 2 billion to 25 billion. Now it comes to 2024. What's our inflation? We're hitting about 31 point something, right? And CBN now says banks should recapitalize from 25 billion to 500 billion. Now the another question is, what's the exchange rate at the moment? Presently our exchange rate is about 1,500, let's leave it like that. Then in 2005, exchange rate was about 120 thereabout. So if you check the 25 billion in 2005, is about $130 million. If you check the 500 billion in year 2024, we are talking about $300 million. Now consider the inflation. In 2005, the inflation was 3.27. In year 2024, the inflation is 31.7.
A drastic difference.
So I was actually hoping that the CBN would do more than that, because if you check the bank's balance sheets, if you check the major banks, you see that the retained earning of these banks are more than what CBN is asking for. And CBN is quite experienced, and I think they did their homework very well by saying that banks should not use their retained earning for the capitalization. And what are we trying to achieve? We are trying to achieve a robust economy. We are trying to achieve $1 trillion economy by 2026. And what is our value of the economy as at the moment? It's about $477 billion, right? So for this to happen, bank will play a major role. And I want to tell you today that CBN has given the banks 2 years to achieve this. Banks will achieve this in a year.
I was even going to go to that, the timeline that the CBN has issued, 2 years. So you're saying that that time is even too long for the banks to achieve the target.
If you check how our banks have been performing recently, you will know that 2 years is much for them to achieve 200 billion, right? All of these, before now, most of the banks have already started working on how to do data capitalization. They have started, right? So CBN coming online to say this officially, we know that this is coming on board and banks have already started. What we observed, what we experienced in 2005, where a lot of banks were merged, acquired, might not happen this time. Might not happen because a lot of things have changed.
Even I'm not talking about the top tier banks now, that's the 5 top tier banks, but I'm talking about the smaller banks. You don't also see that playing out within the smaller banks?
Unless if the smaller banks are tired of banking. If they are not tired of banking, they will surely meet up, because there was a lot of things at stake in banking. Nobody want to jeopardize the license because CBN has asked you to increase your capital base. They will find a way around it.
Okay. Still on, the CBN's policy direction that we have, seen since the assignment of Yemi Cardoso as the CBN governor, there has been quite a lot, happen. And over time, we've also seen a drastic increase in the MPR. That is, initially we saw the 400 basis point increase, and just recently the 200 basis point increase as well to 24.7%. And you are a key player in the fintech space. How would you say all of these has impacted in the fintech industry in Nigeria?
I will break this down in a kind of layman understanding. You see, in banking, in finance, there is buying rates and there is selling rates. Okay, initially it was 18.75. CBN moved it from 18.75 to 22.7, from 20.7 to 24.75. Now, the impact is commercial bank is going to buy money from CBN at 24.75. That is, if they are buying a million naira, CBN is going to charge 240,000 thereabouts on the cost of the fund.
That's the 24.7%.
Yes, that is the cost of that fund. Now, what happens to the bank after buying that fund at 24.75? They sell at maybe 30%, at 35%, at 40%, which means SME, business owners that want to take loan from bank will be charged about 40% or 35% as bank deeming fit. Unlike when we used to assess loan at 20%, at 18%. It means the selling rate of bank is going to increase while it's done on the end users, that is those taking loan from the bank to access the loan at ridiculous interest. Now, if CBN is giving banks at 24%, imagine what happens to microfinance bank. Imagine what happens to fintech. Now, commercial banks are the banks that have access to custom fund in a cheaper form. That is the 24.75. The cost of fund of microfinance bank is more than 24.75. The cost of fund of fintech is more than 24.75. So what means is the cost of fund is higher on fintech, on microfinance bank, on commercial bank, then the selling rate is going to be higher. And what the selling rate is higher, it means that the woman that sells the jewelry for you would access loan from commercial bank at maybe 40%, from microfinance bank maybe at 60% per annum, from fintech maybe at 75% per annum. So what happens to what you buy? It increases. What you used to buy at 20,000 might be sold to you at 30,000.
So from all you've said, you're pointing at the direction of, the cost of credit. And maybe even access to credit at this point, because from all you've said, what I picture right now is, how much of an effect this would have on, micro, small, and medium enterprises. But since we're talking about the fintech space now, what I do understand is that the cost of credit for fintechs is also going to be on the increase.
Yes, it's going to be on the increase. But the another secret is here. Don't forget that in the MPC report, CBN says that cash reserve ratio should be pegged at 45%, which means technically, if a bank has a million, 45% is on hold that cannot be traded with, while the 55% is available for loan disbursement for other transactions. And of course, they cannot do transactions on the 55%. So this means that the access to loan with commercial bank will reduce. So people will have to look for alternative. And the alternative will be microfinance bank. The alternative will be fintech. Then what happens when these huge numbers of people that want to access credit facility comes to fintech without capacity? Or probably, this fear that when you disburse loan to these people, they face to pay back. So we understand clearly that these measures are important for inflation to reduce. So what I would be telling CBN is this should be a short-time solution, right? So after what CBN wants to achieve must have been achieved, this should go back to status quo. That the figure should reduce to, if not a digit, it should be more than 10 to 12%.
Okay. From all you said, you also said that these are expected to drive down inflation. Exactly. That's currently over 30%. But let's hear from you. Again, you run a fintech company, but has there been any, shift in your consumer behavior, before the increase in the MPR and after the increase within the monetary policy rate? Okay.
I would quickly like to say this. There is difference between customers and clients. Okay, a whole lot of Nigerians go to commercial banks for their day-to-day activities, but when it's time for them to access loan, they come to fintech, they come to microfinance bank, right? Now, to those banks, they are clients, but to fintech and MFBs, they are customers. So which means for Nigerians to enjoy benefits of fintech the most, they must turn themselves to clients of fintechs. That is, they must patronize the fintech. Not that it is when you need financial support, when you need to access something your banks cannot give to you, then you come to to the fintech. And this means that before the MPR, of course, we have been doing businesses. Customers are coming, those that want to take loan, those that want to save the more and all. And because fintech interest rates on savings is higher than what commercial bank gives, fintech gives an average of 10% on the savings, while commercial bank gives an average of 5.25 on the savings. So a lot of people that want to save would rather use fintech, and because of the comfort that comes with it is automated. You don't need to go to your fintech to do your savings on daily basis or monthly basis, unlike when you go to the bank to physically do your transactions, or unless you want to do transfers. So with fintech is automated. So we have seen increase in the number of users that want to do the savings, and after this we have seen increase in the number of users that want to access our loan facilities. And right now we are skeptical to disburse loan the way it used to be, and because of a lot of things, because of the economic situation of the country. If you check around, there are lots of fintech now, the quest for collaterals for you, because before you could be disbursed a particular amount of money, and why some that want to do will rather reduce the figure you are asking for in order to reduce their risk. So all of these are because of the NPL and because of the economic situation of the country.
Okay, but I am curious, Mr. Bayonle, has there been, any form of, evolution around the fintech space? Or let me even ask from you, how would you say the fintech space in Nigeria is currently standing? And I ask this because there's been a whole lot, that has played out within the Nigerian economic space in the past year, from inflationary pressures to subsidy removal to naira scarcity and all of those, bringing it down to, the current policy measures we're seeing from the CBN. So generally, away from the monetary policy rate, we're looking at a broader picture of the Nigerian fintech space. What would you say, or how would you say that space is currently faring?
I would say that the acceptability is increasing on a daily basis. Before the cash crunch, when you go to restaurants, when you go to hotels, you want to do your transaction, you want to make payments, it's expected that you see banks, POSs. But now, when you go to these places, what you see are POSs that belong to fintech, right? So it has become norm for Nigerians when they want to do transactions. So I've seen a situation where some friends will tell me that, no, give me this bank account, give me this fintech account, because it's faster, it's reliable, right? So a lot of growth is coming down to fintech space. And I can tell you that commercial banks have seen this coming, and they're equally changing their way of thinking towards fintech space as well. So I'm talking of funding. I can tell you that a lot of fintechs are doing well in this country, and that is why it is important for CBN to look in that direction. It's an $1 trillion economy. All the bonus should not be on just the commercial banks.
Commercial banks.
Yes, it should not be just. We have to look at the private sector. We have to look at the capital markets. We have to look at the fintech space. As of 2023, we have about 217 fintechs in this country, in Nigeria. And after about these 217, about 30% of this fintech raise fund. And they raise fund in an average of $1 million. So which means something unique is happening in fintech space that the government needs to look into and see how it will be well regulated with a proper framework, so that when we are talking of, when we are talking in abroad, when you're talking about their fintech space, it's had relevance because government too is in support of that space. And I think that our government should do the same, because the fintech in Nigeria is growing on a daily basis. We have seen a lot of young Nigerians coming up, seeing a lot of problems and coming up with solutions to tackle these problems. Before now, you can never imagine that with the comfort of your phone, you can apply for credit and it's be disbursed to your account right there. We have seen it happening in fintech. Before now, when you are going to banks, when you're going to commercial banks, like in your office, you have to tell them that, you have to tell your director that, director, I'm going to bank. What you tell your director you're going to bank, they'll tell you, Chiamaka, don't worry, you can resume tomorrow. Because then it's a full day work. You have to be on the queue and all that. But we have seen a situation where you have a complaint, you chat the customer service of the fintech, and it's getting solved in 2-3 hours. Okay, you need a debit card that before now you have to go to bank to queue and all that. But with fintech, the debit card will be delivered to your doorstep. right? So we have seen a whole lot of drastic changes, which is good for the economy. Before now, if you want to buy goods, you have to go to the market, buy your goods, stress yourself, get delivered to you. But with fintech, we have seen a lot of e-commerce doing well. What you just need to do is to make up, request online, give them the address, make your payment to be delivered to your doorstep. So these are the power of fintech, and it has come to stay in this country, and we need to realize this.
I like that you've spoken towards the adaptability and acceptability of the fintech space in Nigeria. But quickly, in like a minute, I'd like to hear from you. What is your expectation, or where do you see the fintech space in, say, 5 years from now? Okay,
to be honest, we still have a whole lot of work to do in the fintech space, because we have seen scenarios where some fintech raise fund and along the line, they go out of business. Okay, a lot of factors could cause this, and I want to say this to Nigerians that fintech, we believe that once we have that idea, once we have the solutions on ground, what needs to be done is to see how we can raise funds in order to push those ideas to the market. It is high time for well-meaning Nigerians to come into the head of fintechs. It is cheaper to raise funds in naira than to raise funds in dollars. So we need to understand this, and I will not blame those trying to raise funds in dollars, because at the long run it's done on the balance sheet of the fintech, especially when you raise your fund maybe at $1,200, and when it's time for you to pay back, or when the company wants to exit, maybe the dollar valuation will be around 1,500, 1,600. What happens? The 400 margin times the number of money you have raised, that's done on the fintech, and most times it could cause the fintech to crash. Okay, so I'll say that in the next 5 years, fintech space needs to be more resilient. Fintech space needs to be more desired, more committed to what we do. That is, irrespective of the fact that we could not raise funds, we have to keep going. Irrespective of the fact that the adaptability is slow, we need to keep growing. Irrespective of the fact that the business is slow, is not moving, we need to keep growing. And that is what I think it will come to space. Then I think that funding from within the country should be of priority too, apart from the funding from outside the world.
Great motivation there for the Nigerian fintech space. I have been speaking with my guest, who is Bayonle Omoyele. He has spoken insightfully on the recent CBN policy directions and how that is affecting not just the Nigerian economy, but specifically the fintech space. Thank you again for all the insight and motivation this morning.
Thank you.
Deeply appreciate it.
Thank you so much. Thank you.
And this is where we say our goodbyes on today's edition of Business Daily, coming to you live on Trust TV. It is the final one for the week, but Business Daily will be with you again on Monday, as usual, to bring you up to speed with trends in the Nigerian business space. So thanks for watching, and my name is Chiamaka Enendu.